when you're sitting in front of a family office, understand that they know more than you do. Okay. You're bringing that deal to the table, but they know more than you do.
Welcome, everyone, to our Hero Capital Raising Show. I'm your host, Tim Mai. Today, I have a super special guest on the line with us. He's super special is because him and I go pretty far back, 15, 16 plus years. So it's been a long time. I get to watch his journey from an event MC to a TV show superstar to now a fund manager and many things in between, I'm sure, of all of those years. And so it's been a huge honor to get to know Mr. Dave Seymour. Like I mentioned, Dave started out his career as a firefighter and have done a lot of things in our industry, including being a TV star and a hard money lender, a capital raiser, a developer, and his exact word, a sexy beast. Still is a sexy beast.
Did I put that in the Q&A? Sexy. That's me, baby. Just ask my wife. Don't ask anybody else, though.
Yes.
Funny, man.
And yeah, so Dave is the CEO of Freedom Venture Investments, which is a private equity real estate fund. And he is responsible for implementing direct relationships with high net worth investors, family offices, commercial banks, institutions, and hedge fund managers, as well as college endowments and pension funds to build those relationships and raise capital from them. Other things that Dave also does, and his team, they have a background in service, military, and firefighting, paramedics, and so they are proud supporter of tunnel2towers.org, which is a first responder and veterans charity. With that, let's welcome Mr. Dave Seymour. Woohoo!
Hey, Tim, how are you, buddy? I don't need to talk. You said it all. I'm done. I'm out of here. Q&A. Let's go.
Let's go.
Good to see you, my friend. How are you?
Yeah, I've been doing very well. Yes, thank you. It's been a long journey, and I actually love watching, your growth. So let's start with that. You can share with everyone, how, like, a bit of your journey from a firefighter to where you are right now.
Yeah, look, man, I started, first of all, I love these environments. The pandemic really boosted our ability to connect with each other. If there was anything positive that came out of that, it was the ability we're all Zoom genies, Google Meets. We got so many platforms now where we have an opportunity to talk with each other. There's no excuses anymore. It's not, I got to get on a plane, I got to get in the car, I got to get on a train. I don't know anybody who talks on the phone anymore either. It's if I can't see your face, if I can't have a quick, what we call back in London, a chin wag, we can't have a chin wag over the internet with a camera, then the success of those interactions are diminished. With all of my linguistic skill sets, I still do better in that one-on-one scenario. If I can talk to an investor, I can find out what I have to service them first rather than me. If I can figure that out in a Zoom call or something, then they tend to go really well. Look, man, short version, I'm an immigrant to the United States of America. Legal. Oh, I might throw a little politics in there. If I zone out, I'm just having a Biden moment, so just hang in there with me. Yeah, I couldn't resist it. I was like, oh, what's he doing? Oh, my God. It's live, Tim. You're in trouble now, baby.
I'm all good.
But it's all good. Yeah, I emigrated from England back in 1986. I was born in London. I grew up in just a straight up blue collar family. My old man was a heating and air conditioning guy. My mom worked in a bank. We grew up on the English equivalent of the projects. We didn't know we were poor. All I needed was a football and a piece of grass, and I was off and running. That's a soccer ball for those of you who don't understand. And to my Canadian friends, I'm halfway through the Chile Canadian game right now. As soon as we're done with this, I'm going to watch the other half. So don't ruin it for me and tell me what the score was. So yeah, my college route, it's interesting. I look back on it today. I was not a good student. I never was. I wasn't a great employee either of the various things that I turned my hand to. And I found out later on I had the disease of entrepreneurism. That's why we always think we can do better. We always know that we're a lot smarter, as we say here in the Boston market. Entrepreneurship was just festering in a positive way inside of me. Anyway, long story short, came to the States, I got married to my first wife. I moved around a little bit, ended up in New England. And while I was in New England, I got connected with some guys. And the guy said to me, why don't you get one of those good government jobs, Dave? Police, firefighter, mail worker, teacher. It's golden. It's like the golden ticket to Willy Wonka's chocolate factory. You get a government pension. You're going to be great. The interesting thing is I brought with me financial illiteracy, which I learned from generations of Seymours back in London, and financial illiteracy, and then the American dream of being able to use a credit card for everything and anything put me in a pretty shitty position. I'm 4 or 5. I'm probably $70,000 in unsecured credit card debt. My house is in pre-foreclosure. And because I'm a hardworking son of a gun, I'm up to about 120 hours a week between 3 full-time jobs. The reason that I lay that foundation out there is I think a lot of people, especially in the capital raising world, will hide their scars, right? They won't tell the failures. They'll only talk about success. And if all you do is tell me how great your deal is, and if all you do is tell me how successful you are, I'm probably not as interested in you unless you tell me, I've had some bumps and bruises. I've learned some lessons. Tenacity is my middle name. I never give up. I stay in the game. I work the angles. I pivot when I have to. If I can hear that message, then for me, as somebody who's looking to deploy capital, raise capital, or invest capital, then it puts me in a better position. It wasn't all peaches and cream, Tim, at the end of the day. Now, when you and I met, I was the product of the education world. Russ Whitney got me for about 30 grand back in the day. 30 grand I didn't have. Put it on my wife's credit cards because she loved me no matter what. Funny, the day we signed up for that class, I was petrified, Tim. She says to me, what do you think? I said, look, here's what I know, Mary Beth. I know that if I keep doing what I've been doing, I keep getting what I'm getting, and what I'm getting ain't working. So I don't know, maybe we try something different. And my wife said to me, go get him, killer. She said, I'm proud of you. I love you. And I'll support you in anything that you want to do. And that was a defining moment for me. And the reason being, nobody had ever given me permission to just go, baby, go. And my wife did that for me that day. I always say she's a rock I get to stand on so I can look cool. You take that foundation away, my home, my wife, my kids, I'm donkey. I'm no good, right? I need that foundation for me so I can go out and lean into what I do well. So anyway, we started that journey, and I was working with, I think it was Lindahl, right? I was doing some stuff with Lindahl, and we met, and Van Hoos was working at one of your events, and the other guy there, we'll call him Mr. Gomez. We all know who we're talking about. Look at you laughing. He tagged me along, and I went along with him, and I got to see this world that was a miracle world for me. It was a miraculous world, because what happened was I started changing my demographic. I started changing my influences. I was hanging around with Tim Mai. I was hanging around with quality individuals, people who were coming, some from something and just growing, some people from nothing and growing. And I'm like, I never saw any of that, man. Like, I didn't know that was a reality. And then I tasted the value of a good real estate transaction. I tasted the value of being compensated for my knowledge. And I went, this is where I want to go. And it put us on a trajectory from there. I became well known for single family buy, fix, and flips up here in the Boston market. We crushed it during the financial crisis. I was able to put short sale systems in place that really helped people, and along the way it got to help us. I saw the value of having cash at the right time. I saw the value in deploying cash rather than just sitting on it like a donkey. Oh, it's going to sit in the bank. It's going to be fine. It's going to be fine. It's in the bank. It's safe. Yeah, it's safe. In an inflationary environment, you're losing about 6% of your money's value on an annual basis. Way to go, genius. You know what I mean? So I learned that money is a tool. Money hates resistance. Money wants to be moving. Move the money. Don't be scared. Do your due diligence. Move the money. Those lessons, those people, those influences were critical. It sets up a motion for all of us, I think. When you get in that flow, magic begins to happen. People say yes. They realize that you're coming from a place of service rather than just greed. If you're in this business just for the money, then get out. But if you're in this business to be of service, to help the average 401k owner in our country sitting on a pretty donkey balance in their 401k accounts, and they can't figure out why it's not growing, but nobody really told them what compounding costs do to an account. So when you educate somebody and you show them, hey, I'm not telling you to do everything one way, but what if you took a portion and you put it into alternative investments? What if you set an expectation of a 3 equity multiple on your principal over a 3 to 5 year hold, right? Protected through the Clydesdale of real estate, multifamily investing, ground up construction. What if you tried that? And if you don't, it's okay. It's not for you. High yield returns are not for everybody. You start using that language and people are like, well, I think it is for me then. It is. And they start asking the right questions because that's all I want. I want to be asked questions. So anyway, that momentum's kept going for me. Yeah, we got the TV show. You know, that was Russell Brunson was actually the guy who sent me an email back in the day. And he said, Dave, you're a funny bastard. They're looking for guys to do house flipping shows again. You should send in an application. I did. I loaded up an application. It was before we had remember those cameras, those eye cameras?
Yeah, those flip
cam. Remember?
Flip cam. Yeah,
Colin had them. Remember Colin had those, right?
Yes.
He was
We
doing
all
something
did.
with
Yes.
we all did, right? We're all selling flip phones. Anyway, before that, it was just an online application. And I knew enough from the marketers like yourself and the other players that I needed to separate myself from the crowd. Loaded my application for the TV show with profanity. That's what I did. I put stuff in there that my grandmother said I should never say. It grabs attention. It makes people listen. Anyway, we did that show for 4 seasons, 29 episodes.
That's good.
And that's a game changer. I'm not going to play that down in any capacity because one minute I'm sitting in the firehouse. I got that good government job we talked about. City pension didn't cut the mustard because I was spending more money than I earned. So I had to move into the real estate world. So one minute I'm sitting in a firehouse watching the shows, and the next minute I'm on Squawk Box and street signs, and I'm hanging out with Becky Quick and Joe Kiernan and those guys. And I'm like, how the hell did that happen? But that opens doors. It opens the ability to have some communication. As marketers, we're always trying to find that credibility component, whether they always say, write a book, do a podcast, do these things to increase our credibility and knowledge in the marketplace. God was good to me. He said, you can flap your gums, you can put on a bit of a show. And we did that TV show. Off of that, we leveraged into, as you said, hard money lending, private lending, small portfolio of multifamily. I own properties in D areas. So I got my scars, I got my lumps and bumps. Worked in construction while I was in the fire department. So I know how to dig a ditch in January and April. I know how to dig a ditch in Boston in the freezing cold. Like all of that stuff led me to be able to be in a position that we're in today. So when you're raising tens of millions of dollars, you better have some credibility and track record behind you to be able to answer those appropriate questions. So anyway, that was letting me, dude, I'll talk for 4 days straight. So I'll try to be as brief as I can.
No, that's phenomenal. And yeah, we're going to dig into how having had the shows is now helping you with your capital raising. But before we go into that, share with us your fund model, what asset type, what asset class you go after, and like what, share with us.
So our first fund was Fund One, really creative name for it. That was a $100 million fund. We closed that out. That focused primarily on repositioning of multifamily assets, 50 to 150 units. That was a repositioning fund, 5 to 7 year exit strategy on that. And it's interesting, as those conversations happen, you begin to, if you listen well to your investors, they'll tell you what they want. And we began to see that some investors were like, I don't want to be in that pool with everybody else. I like the idea of syndicating one-off single assets. Can you do that? And the answer to that is yeah. So I can show the same deal to somebody who wants to be in a fund as to somebody who wants to be in a syndication, because my fund can invest in a syndication component as well as, hey, Tim, your capital is just on 123 Main Street. So we were pretty agnostic on the asset types up to skill sets. We'll just leave it at that. I'm not well versed in, I heard a lady on here say they're doing a conversion from hotel to residential, for example. I'm not versed on that. I don't know that model has been proved out for us yet. So I want to see more data before we go into an asset class like that. Not saying that it's not a great asset class and it's not a great deal. I don't know. I want to know that when I'm speaking about my investments, I'm speaking from a place of execution, a place of repetition. So multifamily repositioning, Sunbelt markets, Carolinas, down to Cape Coral, Fort Myers, all through Southwest Florida. Tampa market's oversaturated now. There's still one or two deals in that market, I think. So we were agnostic on the asset type, but we were focused on the geographic areas. So that was primarily where we've planted our flag. Now, what we've tended to do and what we've now seen is the inflationary environment in which we're living in, millennials not being able to afford homes. They don't all want to live in an apartment complex. So we've put some dirt under agreement that's prime for single family built for rent communities. So there'll be ground up construction communities, single family homes, giving that feel of home ownership. What's interesting with those is you get multiple exit strategies as well, because you can say you build 200, you can keep 100 as a multifamily asset and underwrite it that way, but you could do 100 individually deeded, help your tenants become buyers if that's an exit strategy. So that's pretty exciting. It's a lot of due diligence. It's a lot of data scrape. It's a lot of work to do that, but that's an asset class that we've experienced and are working on. But our real bread and butter right now, Tim, is workforce housing. So when I say workforce housing, it's not Section 8 housing, but the Florida market is so incredibly undersupplied for workforce housing that the demand is just ridiculous. We've got 106, another 75, 80, 200. We got about 300 doors that are in various phases of development and construction in Cape Coral, Fort Myers area right now.
I see.
Primarily workforce housing. So we like that little niche that we've built out for ourselves in that market.
Very cool. Yeah, and I love how you're niched into a very specific area. Not only you niche into specific asset type, but you also niche into a specific area as well.
Yeah.
Yeah, and share with I know when you first started out, I assume you started raising money from retail investors. Is that correct?
Yeah, for sure. Yeah, for sure. After years of teaching, we have a database. We just put it that way, right? I was very blessed to be able to teach 3-day real estate investment classes for a number of different groups over the years, and people always knew me, right? There would be a connection and a trust that had been built over time. So that retail investor was the first investors that came into our funds or into our various offerings. And I'll give everybody who wants to raise money my favorite and most powerful line. I always tell them that an educated investor is a better partner. Because at the end of the day, when I bring in that Midas franchise owner or the lady who owns the coffee shop or the bake shop or whatever business owner or high net worth individual that we talk to, they don't have the depth of understanding that we do, especially in the large commercial real estate world. They don't understand it. I can teach them net operating income. I can teach them cap rates in a market. To this day, I still can't teach anybody what IRR is. I leave that one alone. It confuses the shit out of me. I leave that to the smarter guys on my team. I can relay that information in a way that's palatable, but do they really understand what those projections look like on a pro forma going out? So we spend a lot of time with the retail investor, bringing them up that gradient, because here's something I've learned. As soon as you finish your pro forma, it's wrong. Okay. As soon as you finish it, it's wrong. It just is wrong as soon as you're done. You do not want to be in those conversations later on where things are going a little to the left. Maybe they're going a little to the right, whichever way they're going. You don't want those conversations of lack of understanding and accusatory commentary, if you will. You said this. You don't want to be going back to your PPM to save your ass, right? So if I've got good communication, if I've got good education, I tend to find that retail investors are in it to win it. A guy said to me one time, he said, "Dave, I understand about 95% of this deal." He said, "But I'm investing with the jockey and not the horse." He said, "And you're the jockey. Don't lose my retirement accounts," basically is what he was saying. So yeah, that's how we started. We educated them first and then made sure that they were accredited before we would bring them in any capacity going forward.
Very cool. And then I know you have since transitioned to raise from family offices and now
Mm,
even endowment. So share with us a
mm,
bit about, because there are a number of fund managers on this call that have not reached a lot of
mm,
people in our industry are used to the retail investors,
mm,
but have not done much on the
mm.
family offices and endowment side. So share with us a bit about that and how that side of capital raising works.
Yeah, I don't want to cheese it down at all, Tim. I don't want to make it minimal, but it really is the retail investor buys the sizzle, and the family office, the businesses that are in our business, they buy the steak. When you're sitting in front of a family office, understand that they know more than you do. Okay. You're bringing that deal to the table, but they know more than you do. So my recommendation to be able to attract that capital is to be able to give them something that they cannot get without you. And what I mean by that is a lot of this bigger money, these bigger check writers, they know, for example, that Southwest Florida is probably one of, if not the hottest market in the States, right? I was on a call with a family office from Stuttgart in Germany, and their capital is working at a negative yield right now.
Hmm.
That's how bad it is because of a move to the left and rent control. These are large portfolios of multifamily assets that have been sitting in a negative or par yield for the past 24, 48 months. What can I do for them? Obviously, I can give them a geographic footprint that they've yet to have access to. So we use a lot of terminology in our business about boots on the ground, vertically integrated. We use all of this language, but what does that really mean? For us, we attract family office and larger check writers because we have about 30 years of experience in our market at the executive level. So let me unpack that for you. My chief investment officer is a gentleman by the name of Walter Novicki. Is about my age. We're both in our late 50s. And Walter has been a developer, a GC, a capital raiser in the Cape Coral, Fort Myers, I-4 corridor for the past 25, 30 years. Okay. So, example, we have a family office in Miami that likes to do business with us, and they opened up a line of dialogue 3 years ago now. And the dialogue was, we're looking for what they call a programmatic partner. So if you hear those words from a larger check writer that they're looking for a programmatic partner, get excited, because what they're saying is, I want to get in bed with you. I don't want to just get to first base. I want to cuddle up. I want to make sweet whoopee, and I want to do it for a while. And that's important. But we can only do that because we have 30 plus years experience in that marketplace. Real estate, I think the commercials are right. Real estate is local no matter where you are. And Walter, we're very blessed, knows the brokers and the landowners and the movers and the shakers in the market. He knows them personally, and they really don't change that much over the years. You might get a couple of new players coming into a market, but whether you like it or not, to break into that barrier of being one of the first people to get the phone call takes time, takes some commitment, takes some scars, like I said, takes some successes as well as failures to be in that position. That's what really has worked well for us. We have something that 99% of our competitors don't have, which is that track record, and that we've got roots, man. We got roots in that market that go deep with contractors, with capital, with JV partners. That's important. That makes a difference. It really does. Makes you noticeable to the bigger check writers if you can put that together.
That's awesome. And can you explain, is there a difference in terms of how you raise capital, whether from family offices versus endowments? Are they different type of people, different type of investors? Are they the
Yeah,
same?
no, it's not so much different. It's the size of the check. When somebody says to you, our minimum check is 150 million, most people go, oh, they twitch a little bit and they don't know what to do. And I'll be frank with you, we're not taking in checks of 150 million. It was a Middle Eastern group that was very interested. We packaged up some stuff for them, and They were very excited about writing a check for $250 million, which would have taken out my pipeline at the time. And we used an intermediary who was an investment banker who knew how to wrap this stuff up in an SPV, etc. So here's the advice I could give anybody. If I'm dealing with a check writer 50 million and above, do you have the skill set as an individual to answer all of those questions? Do you have the pro forma abilities to put 3, 4, 5 assets, in a bundle to warrant a $50 million check? Do you then have the integration to be able to complete construction, to get to perm financing, to be able to get to stabilizing 1,000 units so that check writer is excited to write you another check? It's time. Tim, I'd love to tell you, brother, there's a shortcut to this shit. And there's probably someone out there selling a bullshit in a box for $1,000 that says there is. But we know a lot of those people, my friend, and it's not. There's not a shortcut. It's work. It's work. But if you enjoy the work and you enjoy the conversations, and just as much as I want to have questions asked of me, I try every day to ask good questions, right? From endowments, from family offices, from high net worth individuals. If I can do that, then I tend to do well. So that's really the difference. It's the dollar amount and the quality of your underwriting and where you're getting your data from. If you're going to Zillow for your data set, they know. If you're going to good data providers and you're paying for that data, then that they know that as well. You only get 1 or 2 shots at getting this stuff right with these larger groups.
I see. So do you target these larger groups directly? Like you try to go to events that they go to, or do you use intermediaries, or both? How do you go about getting your feet in the door with these larger check writers?
It's combinations. No, it's combinations. The first few years, I trolled LinkedIn just like everybody else does, right? Looking for relationships of value, getting a professional LinkedIn account, being able to go direct through mail on LinkedIn is a game changer. It just sets up a front door that is impressive enough for somebody to maybe open the door a crack so you can get your message in there. We did a lot of the automated outreach on LinkedIn accounts, which now I get and annoys the shit out of me. So I apologize to anybody that I annoyed in the earlier years using that. Hi, my name's Bob. Thanks for accepting my invite. You want to go on a date? No, Bob, I don't know you yet, right? Let's see where we're at. Anytime that I can be in front of a more sophisticated audience, I'll take it. So I've done quite a bit of work with Marcus and Millichamp and their investment group. That's been good. I've done quite a few of the IMNF, is it International Multifamily? That's a pretty good group there. Opportunity where I can be there giving a powerful company packet, if you will. I'll be there and I'll do that. But again, here's the thing. I learned the hard way. When I wasn't prepared for the questions that were going to come towards me, even with my perceived confidence, what I mean? I'm crumbling on the inside. So I'm like, hey, I'm not going to make that mistake again. We need to prep, right? We need to be prepared. You start talking to the Texas school board. You start talking to the NY retirement account. You start talking to those guys. You better be ready. You better be ready. It's like being on Shark Tank with Kevin O'Leary, for heaven's sakes. You know what I mean? If your numbers aren't tight, he knows, and he'll shred you in a heartbeat. And it's not that they want to hurt you or shred you. Being in front of those people is it's a massive learning opportunity. But here's the secret sauce. Do anything and everything that you can to be in front of them, 1. Number 2, make sure that when you do get in front of them, you're prepared, 2. And then number 3, do a great job when you're there with them, because then the referral business will snowball and manifest. Good word travels fast in this business. Unfortunately, bad word travels faster. But if you can get some positivity going, then there's some legs behind that for sure.
Okay. So with these bigger check writers, is there a pain point for them that, and what are their pain point? How, yeah.
Yeah, they suffer with massive mofo. They really do. Not mofo, FOMO. They fear of missing out. They really do. For example, Yeah, I did quite a bit of work with the Jewish conference group in New York. Friend of mine's a rabbi. I was welcomed into that community, and I was amazed at how attractive I became because I was in the market that they wanted to be in, right? So there's a competitive mindset with those bigger check writers, especially at the family office level, not so much with the next level up because they're writing these massive checks. And if they can get a 3% yield or a 4% yield, they're pretty excited, right? Insurance companies, they'll work in a smaller yield bracket than a family office will. But that fear of missing out, being able to put a strong deal in front of two or three of those family office types will get you some traction and some attention as well. The other pain points for them is I'm going to go 0 degrees on it, bro. The environment in which we're living in today, the geopolitical environment, is killing these guys, man. It's killing them. They are so angry. They're so angry that tax the rich and all of this shit that's floating around out there.
Right.
How about you just grind it out like I did? Why don't you learn? This is America. This is the greatest country in the world for wealth creation and entrepreneurship, tenacity, stick-to-itness, lean into it, all of that stuff. A lot of these family offices, they might be second or third generation, but they've still got that work ethic, right? That came from way back when. So when that is challenged, when their capital is challenged and they're not getting the tax breaks, the inflation's chewing up what's going on, they got some pain points, man. They got some pain points. So I'm going to be frank with you. I don't avoid those pain points. I find out where they are. I scratch at the wound. And once I get there, I'll rip that sucker open and get a little confrontational sometimes. And they respect that. They respect that because this is not a delicate business. We're dealing with tens of millions, hundreds of millions of dollars. So it's not delicate. You better have the chutzpah, as my friends in New York would say, to be able to stay in the game and fight. You know, I just had a call today with one of my higher net worth investors, and I'm like, dude, I'm in the trenches for you. I'm fighting for you every day. I understand that. And he's an educated investor, so he resonates. He understands because he's fighting in some of his own deals. Yeah, I would say they hate the environment in which we're put in right now. After the stuff that went down in New York, the Californian investors trying to get out of the California environment. There's a lot going on. There's a lot going on. I see a lot of money coming across the border, coming from Europe, some Middle Eastern capital knocking on the door. So, yeah, people just want a good deal with a good yield, and they don't want somebody sticking their hand in their pocket at every and all opportunities if they can avoid it. So those are definite pain points for those guys.
I see. And I heard that some of these bigger check writers, like they demand a lot more. So like when you're dealing with the bigger check writers, typically for you, like how much of a check are they cutting? Is it a few million? Is it tens of millions? And then what's the difference between a check writer that writes 2-3 million versus a check writer that writes 10 plus million in terms of the demand that they're looking for?
Yeah, that's a great question, brother. So I'll give you an example from a conversation I had with a Chicago family office, and we're going through a couple of our deals. They put some term sheets together. They put an LOI together for a JV. They put a term sheet together as an LP. They put a term sheet together as an LPGP, co-GP. Like they'll give you 4 or 5 options, all of which work magnificently for them. Okay, magnificently for them. So, a friend of mine who's a platform speaker, trainer, for want of a better term, and he said one day, he said, people will smell commission breath a mile away. And what that means is, the context of that is if I come from a place of any weakness, if I share or show any weakness in what my intent is, what my journey is on a specific deal, then the money will smell that weakness. And it's not personal. It can get personal, but generally it's not personal. But when somebody says to me, the gold makes the rules, can't tell you how many times I've heard that. I will consistently push back. I got to be prepared to walk away. I got to be prepared to move. This deal obviously isn't for you. When you're coming in with these kinds of waterfall splits and you're coming in with this much of the co-GP position, you're putting me in a position where I can't feed my kids. And if I can't feed my kids, I'm not going to work for you. I want to go to work with you, not for you. See, that's the language you have to start to use, because they'll push you around, man. They think that just because they can write a $50 million or a $250 million check, the decency goes out the window sometimes. So I've found that if I stand my ground, I don't have commission breath. If I don't get this money from you, it's done. I got to go back to working at Walmart. If I'm putting that feeling out there, they'll sniff that a mile away, brother. So again, it goes back to confidence in the shoes that you stand in every day in this business. Are you confident in them, right? Can you welcome, again, the questions that need to be asked? And they do. I had one deal, it was a bridge lender. We were getting close to a closing and I needed a bridge. Oh, and this guy came in there and he was like 28% on the money. He wanted 9 points. He wanted a point a month after that. We were looking for maybe a $5 million bridge. You start doing the math. He's taking all of the gravy out of this deal, all of it. Fat, greedy guy, right? Pigs get fat, hogs get slaughtered. So there's hogs out there. They think they have that opportunity and they'll take it. Now, I got to be true to myself. I got to be true to my big guy upstairs, right? If I was in their shoes, I would probably try as well. If I'm writing a check for 50 mil, I might put that squeeze in there a little bit, see what kind of juice comes out of it. But at the end of the day, I've been on both sides of those equations. And I think I know that integrity and decency, if those take precedent in every transaction, then good things happen. If I allow myself to be bullied or I try and bully, then that's not good, man. I'm too old for that. I don't need to tell the world how cool I am because I got a private jet and I do this shit and I ride around in a Rolls Royce. It's all garbage, man. It's all cars, boats, and leather coats. It doesn't mean anything. But if I can sit in a good place with these people and have a good, just straight up conversation with somebody, and again, answer the right questions, then generally these things move forward. So I don't mean to be long-winded on it, but don't be bullied just because the guy got a bigger check. Trust me, there's more money in the market than there are deals right now. So if you've got a deal, just understand, keep shopping until it makes sense. Don't bend over for a deal that doesn't make sense for you. It's not worth it.
Right. Yeah, and I also start to see, especially on that family office institutional side, there's more money coming back to the market now, I think, than there were the last couple of years.
Yeah. It's that dry powder we've been talking about. Everybody says dry powder. They always, there's dry powder. There's dry powder. A lot of that dry powder was free money, right? And that free money is beginning to dry up. I like it when stuff makes sense, Tim. And the market's beginning to make sense to me a little bit. Not a lot, but a little bit more than the compressed cap rates and 10% rent increases year over year for the next 20 years. I promise. That BS just drove me nuts. So I got to see all of that crap from the big names in the business who shout from treetops. And it's funny. Watch this, right? Watch this, my friend. All those people that were shouting about their great deals are now going back to education to make money because the deals up there, they're all educators. Oh, right? They're all educated. Oh, we're running out of money. Let's put a course out. What should we call it? I don't know. Let's put something out there. We're going to make some money. Pisses me off, dude. Pisses me off. If you'd have put a decent, honest, integrity-based deal together in the first place, it would cash flow through all market cycles, all capital cycles. Maybe I'm wrong. I don't know. Maybe I'm wrong. Maybe I should have taken the easy money and just done what I was doing, but I can't sleep at night when I do that. Sorry. I get soapboxy in my old age, man. I'm like a pit bull chewing on your ankle.
So we'll lead right into that. Like, where do you see this market going? What do you see in the horizon in the next 12, 24, maybe even 36 months?
Yeah, great questions again. Look, the supply-demand imbalance is not going to be fixed in the next 12, 24, 48, right? I think we've got at least 4 to 6, if not longer, years of market supply that needs to be absorbed. So when we think about that absorption, what does that look like? I don't see the price of houses coming down. We might get a softening again of interest rates so that maybe homes are more affordable. The bankers and the real estate agents are all telling everybody, buy the house now and refinance it later. You're going to be here 10 years anyway. Everybody's got a line to be able to execute their plan. Being in the position that we're in right now, we are very bullish on building. Let's build these assets. Most people are fighting over existing assets. We will see, and we're beginning to see, some distress in the market for all of that crap that they were putting under agreement and, putting the low cost money on it before. That stuff's going to be coming back. We're probably looking at anywhere between 10, 15, 20 deals a week, if not more right now, that have some kind of distress attached to them. So there's an opportunity there. We see a lot of opportunity in building. The challenge with building is getting into perm financing that makes sense. Like I said at the beginning of this call here, as soon as you put your pro forma together, it's wrong. So how do you pro forma out what interest rates are going to look like at the time that you're trying to get from out of construction loans into permanent financing? We do the very best we can based on track record and experience. So anyway, we see opportunity there. We see opportunity in distressed assets. I still think there's opportunity in multifamily repositioning. And in the right market is critical. And I don't want to make it political, but I got to protect investors' capital. I like red states. I like where business is welcome. I like where it makes sense from our standpoint as multifamily asset owners and developers to be welcomed. So we're staying focused on those areas. I'm not building apartment complexes in New York, Massachusetts, Rhode Island, or Connecticut. And sorry, Gavin Newsom, I'm not building them out in California either. It is what it is, but that's what we focus on. That's where we're putting our attention. That's where we're driving the capital too. So,
love it, love it. All right, Dave. For those that want to reach out to you, connect with you, possibly invest with you, where would you like to send them?
You can call my office, 781-244. What the hell's my office number? 781-922-4418. 781-922-4418. Or you can get me direct if you want to just shoot me an email. You can shoot me an email at dave@freedomventure.com. dave@freedomventure.com. 781-922-4418.
And then your website.
freedomventure.com.
Okay.
Yeah, freedomventure.com. You can get a hold of any one of us there. Yeah, schedule a call if you want to shoot the breeze and see what's going on. We just put 3 land deals under development this week. So we'll be in a raise on those. Big picture on those, they're usually anywhere between a 2.4 and a 3.2 equity multiple over 3 to 5 years. So they're aggressive return profiles, but you ain't seeing no cash flow for a couple of years. So it all depends on the palate of the investor. But yeah, we got stuff going on, man. We got business.
I love it. So right now, all your deals this year, you're focused primarily on new construction. Is that correct?
Yeah. We have a 75-unit deal, workforce housing plus. That's in Cape Coral. We just got another deal that we're doing, which is a mixed use. That's another 100 units with our headquarters, some office space that's going in there. And we're repositioning and recapitalizing another project that we already own on a land deal in Fort Myers. So
Gotcha.
we got a lot of projects going on, but I'm also looking at repositioning deals at the same time. So if there's delta there, we're going to capitalize it as long as I can raise the money to do it. And we usually do okay with that. Yeah.
Perfect. Dave, thank you so much for being on this show with me today.